How we doing? How we doing? This is Destination Denver, Colorado, and today, the hottest market in America. Are better days ahead for the Denver real estate market? Let's talk about it, starting right now. All right, this is Destination Denver, Colorado. I'm your host, Jimmy Evertson. Listen, if you're interested in learning all the ins and outs, pros and cons to moving to or around the Denver metro area, then this is the channel for you. So that subscribe button and notification icon you see on your screen, make sure you click on that as I'm dropping new videos for you each and every week. And as much as I try to be a little informative here on camera, I'm also a licensed mortgage broker covering the entire state of Colorado and team with some of the Front Range's most talented realtors. And we're helping people move here each and every day. So the number and email you see on your screen, know that I'm always the person answering your phone calls, answer your texts, answer your emails. They're winning if you need me. Now that we're done with that fun-filled stuff, let's get to what we're here for, and that is the headlines may say the hottest market in America, but are better days ahead for the Denver real estate market. So the hottest market in America, well, at least according to US News, which rated the Denver, Aurora, Lakewood metro area as the hottest in the country. Interesting enough to me, 3 of the top 5 were in North Carolina. You had Raleigh, Durham, and Charlotte. Those are all communities that are mentioned to me pretty often by people moving from different states that are considering Colorado, North Carolina, Austin and Nashville always come up, but I digress. And Denver was not the only city in Colorado that got some love. Colorado Springs, Greeley, and Fort Collins were all in the top 20 of that list. Now, one of the major factors that US News considered in this was the fact that Denver is one of only 4 cities nationwide that has returned to pre-pandemic levels in housing in regard to inventory and price stability. So the other 3 all being in Texas, San Antonio, Dallas, and Austin. So when we talk about inventory and stability, that's not to say that prices came down. That's not to say that inventory just started to flood the market. It just means that if you look back at from basically March of 2020 till today, you had crazy low rates and inventory just selling like hotcakes. The price of homes surging, and this was nationwide, where there was very little inventory on the market, to today where prices have stabilized. We're seeing appreciation more in the 2, 3, 4%, depending on the part of the country and certainly the part of Denver you're talking about. And then you've seen some inventory return to the market as everything isn't being bought so rather quickly. So knowing that Denver is one of, again, only 4 markets that matches that stability that you had pre-pandemic is pretty crucial to our market. Now, where does this come from? It obviously comes from an increase in mortgage interest rates that started basically in the beginning of summer of 2022 and continues to be a challenge for our market to this day, making this video in April, May of 2024. So knowing where we are, what the higher interest rates do to our market. So higher interest rates do not just impact buyers of homes, it also impacts people who are going to sell their house. The idea, of course, being that if you are going to buy a home, you're recognizing that your payment is going to be higher. It can be a difficult thing for people to stomach, and I understand that. You see a payment for a home, so that turns away buyers. And then obviously if you're going to sell your house, more than likely you are going to buy something. So sellers see the interest rate that they are in currently in a solid lower interest rate and a lower payment, and the idea of selling that home and buying a house and seeing that payment increase has really hindered people's decision to sell homes. And so that's one of the things that you'll hear referenced in housing markets nationwide is a term called golden handcuffs. Of course, they're golden, so you can't complain too much. But when you talk about somebody owning a home, being in an interest rate in the 2s, 3s, maybe 4% range, and then they look at the potential mortgage payment in the 6s, in the 7s of another home, and the idea of the benefit they get from selling and buying just doesn't outweigh the risk of doing so. So that's impacting a lot of your inventory. You don't have as many people willing to sell their houses, and at the same time, you do have more buyers entering the market. I think, at least the feeling I have gotten from clients and colleagues alike, is that I think people are starting to accept the fact that interest rates are going to remain higher. And so they are recognizing if they're going to buy a house, now is the time. Waiting has not benefited them up to this point. Now, a big factor when it comes to these rates is the Fed making a decision as far as their short-term rates. Now, again, the Fed and short-term rates are not the same as mortgage-backed securities and mortgage rates, but they do have an eventual correlation. When the Fed decides to lower their interest rates, eventually mortgage rates will decrease as well. We anticipated, at least some people anticipated, that the Fed would make a move on rates at some point this year. My firm belief, they will not. At least that's what I've said the entire year. I don't think that the Fed sees enough progress on inflation to make a determination to lower interest rates. We haven't seen good inflation data yet this year. Labor reports look strong for the economy. And as bad as this is, if we want better interest rates, we tend to need to see a retraction of the economy. We need to see a higher jobless claims. We need to see less new employment. So basically we have to cheer against the economy to see rates get better. That's kind of the layman's terms of it. So as I mentioned before, when I talked about buyers coming to terms, I do think that in the Denver market, you are starting to see some sellers come to the understanding that waiting, unless they truly have the ability to wait as long as they want, sellers are understanding that they might as well pull the trigger. You're seeing more homes come to market. You also see that buyers coming to that same realization. As much as they would love for interest rates to get into the 5s or better, they understand that if they can get in the 6s, now may be the best opportunity they have to buy a home. So seeing both buyers and sellers come to that realization, understanding that waiting isn't necessarily benefiting either of them, has been promising for the market. Now, something else we saw certainly during the pandemic was a complete lack of seasonality that you normally see in real estate. So when you think about people buying and selling homes, usually there are certain times of the year where you see more of it. As an example, we typically see a large increase in real estate transactions following Easter and then basically going into Mother's Day. Then you see a lull. Like say, for example, around a couple weeks before and a couple weeks after the July 4th weekend. People really aren't doing a whole lot of buying and selling homes. Home sales tend to slow down in the winter time as well as the months get colder. Well, during the pandemic, money was so cheap that you really didn't see that. You saw basically 24 months of non-stop home sales. Now that rates have gotten higher, now that there is less affordability, you see more of that seasonality come back to the market. You saw a certain surge in home sales following Easter. You saw more people. I certainly had my phone ringing more often than normal. So seeing a return to that seasonality will be interesting for the market in general. Now, when we talk about inventory, you certainly have sellers reluctant to sell. You have buyers struggling with affordability, and you have in this mix home builders developing obviously new neighborhoods and new construction. And one of the things I found very interesting about new construction is the desires of buyers, people who are looking at these homes. And I want to take a quick history lesson, if you will. So basically from the early 1900s all the way up through the 1970s, the average size of a home was as low as 900 square feet to roughly about 1,500 square feet. 1,500 square feet was your typical size home in the 60s, 70s, getting into the 80s. You're talking about homes that were 2 to maybe 3 bedroom, 1, maybe 2 baths, bare bones. And I think it's safe to say that families tended to be larger during that period of time, at least on average. I'll call it the baby boomer generation for nothing. But that was the idea of buying a home was about the essentials, getting the basics. Nowadays, we like more of our bells and whistles. So as you start to see home construction in the 80s, 90s, now into the 2000s, you start to see that new construction increase. Now, more recently, the average home size that is being built sits around 2,000 square feet. But for a large period of time, for decades, that was closer to 2,300 to 2,500 square feet. You're talking about 800 to 1,000 square feet larger than your typical home built previous. Why? Because we want more. Because we want 2-car garages, and we want yards, and we want a basement, and we want walk-in closets, and we want a big master bath, and we want our man cave. We want all of the things. So the struggle is between what needs to be built to appeal to buyers, but also what needs to be built to deal with affordability. A secondary struggle there in Denver is the fact that you didn't see a lot of townhomes and a lot of duplexes, multifamily construction in Denver until more recently. There were some, but it is certainly a more recent change in real estate in Denver that you start to see more homes that are connected. You start to see more townhomes, slot homes, what have you. Up until then, you saw a lot of detached, maybe the occasional duplex. So you'll have to forgive me because they have not released April data yet, so I have to go with March, but there are 195 neighborhoods in the Denver metro area. And out of those 195, as of the making of this video, there were 5,020 homes for sale. So when you talk about inventory, still a real lack there. And people will tell you, months of inventory, and the idea that if no homes were sold, this is how many months. Honest to God, I don't think that matters. I think when it comes to homes, it depends on the neighborhoods you want to be in, your timeline, and how specific you want to be. Days on month is about the most useless stat I could possibly think of. It means nothing to the consumer. Now, I would get excited about the fact that we saw a 16% increase in inventory, but I mean, percentages, when you're coming from very little, a 16% increase really isn't all it's cracked up to be, but at least it's a positive sign. It's moving in the right direction. That more homes, inventory increasing is always a good thing. Now, as of, again, the making of this video, the average median list price of homes in the Denver metro was basically $600,000, $599,900. The actual sales price median was $595. So telling you that homes were listed at one price and buyers were able to get the median price, a bit of a win there. Now, I can tell you from experience in this market, we saw some homes that sat and buyers could have their way negotiating with sellers. And we saw some homes could be in the same neighborhood, could even seem very similar to House A, but House B had multiple offers, sold over list price, got aggressive. It's a very interesting market right now. What homes sell, what homes don't. Now, rental vacancies have been interesting. So as of, again, the making of this video, I have to keep saying that so you don't already know. The rental vacancy sat at 4.4%. Now you're starting to see rental vacancy shrink. And we've been seeing this trend for months and months and months. Why? Because fewer people are buying homes. You have plenty of people moving here still. You have plenty of people looking for housing, but those rents are starting to shrink. Rental affordability, I'm not going to argue this fact. It is more affordable for the vast majority of people to rent than it is to buy. I think there are still some rentals that are giving some good opportunities, some good options, but as far as getting the deals, rentals don't have to necessarily bend to you as much as they might have a handful of months ago. And in case you are interested in knowing about whether the most expensive or least expensive, here, at least as far as real estate stats are the highest and lowest price point and rent averages for the Denver metro. Now, I found this list interesting. Now, I can tell you as far as most expensive, areas like Country Club, Hilltop, Cherry Creek, Wash Park. For locals, they're going to tell you kind of no duh. These are expensive areas. They always have been. For least expensive, you're going to start Googling and you're going to say, Jimmy, Windsor as an example that's north. You're not just casually driving from Windsor down to Denver on a daily basis. It's included in these stats. So as far as your least expensive, except for some of those to be on the outer outskirts, all those things of Denver. So are better days ahead for the Denver market? This is why I truly believe they are. One, you are starting to see that new home construction recognize the need for affordable housing. And what I mean by affordable is for a long time, you started to see more homes being built that just leaned toward luxury. They were higher cost, they were higher finishes. They were having a tough time creating a home that your average person could even hope to afford. So if we start to see homes become more simplistic, and I mean that. Maybe you don't have a granite countertop and maybe you don't have this walk-in closet in your perfect bathroom, but you have a home that is well built, that has the 2 to 3 bedroom that has the 1 to 2 baths, that gives you the basics to get into a home at a decent cost and hopefully build equity, I think that is great for our market. I think the second positive is that, again, you are starting to see people come to the realization that if a move is going to be made, now is the time. So you're starting to see more sellers make that decision to put their homes on the market. You're starting to see more buyers spread their views as well. And what I mean by that is the realization that you might not be super close to Denver, but there are all these communities as you get into the suburbs and you get into other cities in and around Denver that have a lot going for them. And to me, the biggest reason there are positive days for Denver is that Denver genuinely needed a leveling of home prices badly. For many years, even before the pandemic, housing appreciation in Denver was out of control. It was eventually going to lead to where we are today. We got there faster because of what happened during those 2 years of the pandemic, but we are to a point where Denver is a very difficult city to afford housing in, whether you are buying or whether you are renting. So to see interest rates cause this stability, to cause homes to level in their prices, to see more inventory incrementally come onto the market but not sell in 2 seconds, I think is very beneficial for everybody in the Denver market, or at least more people than it hurts. But hey, real estate is always fluctuating, markets fluctuate, and hopefully we'll see rates eventually head in the right direction. But again, I'll tell you, I don't see it happening in 2024, but we'll see. Any questions you have, that is a great opportunity for us to have a chat, a call, a text, an email. Know that I'm always the person. Answer your phone calls, answer your texts, answer your emails. There, win in if you need me. This is Destination Denver, Colorado. I'm your host, Jimmy Everts. That was Are There Better Days Ahead for the Denver real estate market? Until I see you next time.